Welcome to Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Deal Closers. I am your host, Anette, Talie, and my guest today is Alex Felice. Welcome, Alex.
Thank you so much for having me. I'm excited to be here.
I am so excited too. So let me tell you a little bit about Alex. He is a real estate investor and has spent a career in bank lending. He is an expert in long-distance real estate, debt strategies, and risk analysis. Alex has been buying real estate since 2016 and currently owns 8 single-family houses and a small multifamily unit. He is an avid reader, likes to spend time doing photography, lifting weights, and he owns the website brokeisachoice.com, which has become a cultural phenomenon. Wow. So tell me a little bit about yourself and how did you get into real estate?
I got into real estate, started around 2014. I started learning, mostly because like so many Americans, I was sick of living week to week and month to month, working for a tyrannous boss that I hated, with no end in sight, buying up consumer debt, nice cars and fancy clothes, and just going through that W-2, slavery. And I got sick of it, man, really sick of it, like really, really sick of it. And I said, I'll do anything that I possibly can to get out of this, but I don't want to work that hard. And I had no money.
How old were you?
It was probably 2014 that this happened. So 30.
Okay.
30. So I was a financial train wreck until I was 31 or so, about that. So if you're younger than that and you have anything resembling financial responsibility, you are way ahead of the game as far as I'm concerned. And so I started looking at how can I make money without, I didn't want to get rich quick scheme. I wanted something passive because I didn't really want to go to work every day. I didn't have that much money and I wanted it to be tried and true. Okay. I didn't want to go off and try to do something that was like Bitcoin or, develop an app or something that was out of my skill set and maybe short lived. So it had to be tried and true. Dude, real estate. And it happened to be 2014 where the real estate market was, people were still a little scared of it. It wasn't popularized like it is now, because we had just gotten through the crash. So prices were depressed. There was an abundance of properties that the banks were still unloading. Debt was starting to become easy to, liquidity was starting to get easy. So I jumped in and I bought a house that I lived in 2014. We bought it for like $55,000 off the MLS and moved in with an FHA loan. So I was out of pocket like $3,000. 18 months later, appraised for $115,000 and I was hooked. I was like, this is easy.
That's what everybody says, right? It's easy. Let's all do it.
That's right. I say it all the time. It's easy.
All right. So how did your website come about? Broke is a choice.
Broke is a choice. Yeah. So like I said, I was broke for 30 years of my life. Like almost every single, I'm painting with a broad brush, but probably 90+% of people are broke. And by broke, I mean, you can't quit your job because you have financial responsibilities and you don't have the income to support it without working. You're broke. You're stuck. And it's just, I realize that is common, but it is our choice. We get sucked into buying cars and iPhones and nonsense. And we try to live this expensive cost of living to keep up with other people. And people don't want to make any sacrifice. And so I changed my life, not by working that much harder. I'm pretty lazy. I talk a lot of smack online about what I do and don't do, but I'm not a hyper ambitious guy. I'm not a hyper hard worker. I just realized that I can get really far if I make a little sacrifice, and most people won't make any sacrifice at all whatsoever. They won't sell their car. They won't buy crappy clothes. They won't give up, fancy restaurants and all this other stuff. So they make no sacrifice. And so that's their choice and that's fine. But that's why you're broke. If you try a little bit, it goes a long way. And so in 2017, I had bought 5-6 houses at the time and I knew some stuff. And I said, I can share my story with the world to maybe help the next person to get out of being broke and make better choices. I needed a name that was brash and kind of rude, but also incontrovertibly true, which is my style. I say what you don't want to. I say a lot of things that people don't want to hear, and I say it kind of rude. And but I'm right. So
and that's why I love you. That's why I love to follow you.
Well, thank you. And so look, it's not for everybody. Some people are like, dude, you don't need to be that way. And some people are like, I like it. I like his style, and I'm okay with being a polarizing figure. But that's why the name came that way. Broker's a choice, because it 100% is a choice. You just don't want to hear it.
Yeah, but you have to also be true to yourself. When you are, I think if that's, the way you think, you should just be the way you are, and people are going to follow you. If they like you, they will follow you. If they don't like you, they will unfriend you or, not hang out with you. So I think I love that about you, that you are just true to yourself, and your sarcasm, it's amazing.
The Deal.
The last deal I did, I did this flip that's going on right now, but the deal you probably want to hear about is the multifamily. That was an interesting deal. 24 units in Fayetteville, North Carolina. It was a pretty standard, straightforward deal. So we bought it in 2019. So as you know, market mania is at its peak. Prices, cap rates are being crunched due to the long-term low interest rate environment. And so you basically have to pay up for everything right now. And so, but I wanted to get in the game. So we went out and
And before this, you had single family, correct?
8 single families, yeah. And I've done a bunch of other transactions with other people, helping them buy houses and stuff. So I probably done, between my team and I, we probably did 40 transactions in 2018 and another 40 in 2019.
Excellent.
I own personally the eight single family homes, but I really wanted to get into multifamily. Just will scale. Single family doesn't scale. I mean, I don't want 50 of them. So
yeah, you have so many locations. It's hard. That's the same for me. After getting to my third duplex, and I also manage 16 units in a different location. It was already like too many places to go, and it just gets hard. Different roofs. So much easier if you have, one place with 24 units.
That's the whole thing.
All right. So how did you find it?
So this is the best part of the story. And this is what I tell people, like, you should have your own website. I don't care what you think you know or don't know about real estate or how new you are or whatever the case is. If you're on the internet and you're gonna live going forward into the future where the internet's gonna become a bigger part of your life, then you need your own website. Not a Facebook page, not an Instagram page. You need your own URL. And so I started mine, like you said, Broker's a Choice, and I just go on there and I don't do ads. I don't make any money on that website. I don't sell any courses or coaching. And I don't really do emails. It's a very organic thing. But people find me because, I'm loud. Okay. So I say all that to say, one of the things I do is on my website is I offer video chats for free on Thursday nights. So if you want to video chat with me, you can meet me just like we're talking right now. You chat, no big deal. And so a guy comes on there and he goes, hey, I want to buy houses in North Carolina. Can you help me? We chatted. Yep, sure can. Helped him buy a few. And then one day he emails me and he says, hey, I got a 24 unit. I want to buy it. I have all the money, but I don't know how to do the deal. I don't have the transactional experience to know how to put this deal together. Can you help? Yeah, I sure can help. So we put together an LOI. It was accepted. It was 1.25 million. We got a loan for 75% LTV. We raised the difference. We didn't have to raise the difference, but I wanted to bring in partners because if you make somebody money, they'll give you more. So I brought in other partners and we closed the deal. We ended up negotiating down to 1 million, which is probably still too high, but that's
okay. Let's unpack this for a little. Okay. So you found it. He found it on the MLS you mentioned before? No, he
found it by networking with brokers in the area. So before that deal hit the market, we got a shot at it, which is excellent. Like I only have the experience with this one deal, but that's pretty much how multifamily works. Like you have to network with the brokers because they're going to give you the pocket listings. By the time it hits the internet, especially in this environment where things are so hot and people are clamoring for deals, by the time it hits the internet, everybody who could have paid for it easily has passed on it.
Yeah, they don't want it for a reason. By that time, it's too high. It just doesn't work, right? Okay, so you found it through networking, which is so important. All right, so then he said that he had all the money, but you decided to bring more partners. How many partners did you end up having on this deal?
5 total, me and 4 people.
You and 4 people.
Yep.
And how were the responsibilities divided? Were they just capital partners or?
Yeah, I structured it as a JV. It was me, him, and 3 people we knew. So we didn't really have to solicit. On a $1 million deal, it didn't make financial sense to do a syndication, because a syndication attorney is going to cost you, call it 15 grand.
Yeah.
Or 10 grand, right? Well, that's 1%. It's such a high percent of the, I don't know, it's 1% or 0.1%. It's such a high percent of the deal that it didn't make sense
Right.
for me to do that. And so I said, okay, I'll just raise the money. My legal fees were, I think, like 2 grand instead. And we basically did it really simple. Me and my one partner, we have the bulk shares, which is both equity and cash flow. We basically split everything down the middle. So whatever percentage of the deal you own, that's what you get in profit, and you own an equity. So it's a very simple deal. And we structured, because I'm in lending, you should know that if anybody on a loan, anybody who owns 20% of the deal has to be a guarantor. And so what we did was we absolved our passive investors from guaranteeing the loan by making them, I think, like 18 and a little bit percent. And so we scooted that around. So it's basically even, except me and my main partner have a little bit higher shares, and we put in a little bit more money to buy that equity. But pretty simple, very simple structure.
What was your reasoning for not wanting them to guarantee the loan? Wouldn't it be better actually to have their net worths part of the backing the loan?
Didn't need it, didn't care, and it was an easier way for me to sell, right? It's like me and my partner have never done one of these. So you got to ask a bunch of people to believe in you.
Mm-hmm.
And so I wanted to make that transaction as easy as possible. So I say, hey, look, you'll have to give up. You won't have to guarantee anything. I wanted to shift the risk and say, look, you give me money. I'm going to give you a return. You're going to take a risk on me because I haven't done this before, but I'm going to reduce your risk in that you have no liability other than your initial investment.
Oh, excellent. I didn't think of that. I would think that they would want to be on the loan, but that's right. It's reducing the risk. So that makes it more attractive for them.
Yep.
Sure.
And it's also ease of transaction, right? Because otherwise, if you guarantee a loan, now you have to start sending the bank your personal financial statements, tax returns, W-2s, da-da-da-da-da-da-da-da-da. And it's like, I just wanted them to send me a check for the whatever it was, 60 grand and be done. I just wanted it to be easy. So I said, look, I can make this easy for you. And I'm not so concerned about the deal itself. So I didn't need to spread the risk in that way. I'd rather absolve them of risk and make the transaction easy.
Awesome. All right. So you said that you had all the money, and you raised the money. But how was the financing? How you are in lending, so you probably knew how to navigate this. How did you work out that financing?
Pretty simple. I mean, there wasn't that much to work out. It was we negotiated under $1 million. It was a $750,000 loan. It was $30,000 in transaction costs. So we raised $280,000 across 5 people. Like I said, it's a 5% fixed for 10 years with a 20-year AM.
Okay, that's not bad. 10 years it's really good right now in the climate that we are, right? You don't want to do 5 years.
Yeah, I should have, in retrospect on this deal, all the things that I don't like about this deal, 5% is okay. 10-year fixed is good. But if I had gone bigger, right, 24 is way too small. If I had gone bigger, I could have gotten way better terms. And I think about that in regards to everything. So scale was the reason I went into multifamily, and scale is the reason that I'll never do anything smaller than, like, the next one's got to be at least 50 or bigger. And
right.
It's not an ego thing. It just makes more sense as you get bigger.
Yeah. But you only realize that once you did it, right? Like I did that 6 unit after my duplex, and I thought, wow, this is a big step. And then once I did it, I'm like, I should have done it bigger. All the paperwork, all the cost, I should have gone bigger than that. But you don't know that until you do it.
Well, I figured it out. Unfortunately, it was annoying because I figured it out really quick. I was like, it was early in due diligence, and I was like, we should have gotten something bigger. It's going to start pissing me off. So I wasn't even happy about how many I had bought before I realized it, and I was already bent out of shape. And so now I'm actively looking for the next one, because I'm like, if we did 50 or 75 units, it'd be a lot easier.
All right. So how did you negotiate the price from 1.25 to $1 million? That's a big chunk.
Well, they were insane for asking what they were asking, so it was easy to knock them down. We had gotten them down to 1.1 pretty easily. We had gotten them down to 1.1 pretty easily, and then after due diligence, I retraded. I didn't want to retrade, but they were just. I still think at 1 million, I think I overpaid, to be honest.
So what was the price per unit at 1 million?
42, something like that.
40, and what are the rents there?
They were under rented at 500, and now we're raising them to 600 pretty quickly.
Oh, awesome. Did you have to do renovations?
We've done some renovations, but we find out that the tenants don't really care what you know what it is the place was being the place was being managed by the guy that owned it, which, you know, anybody who self-manages that thinks they're saving money, you're wrong. You're dead ass wrong. Pay somebody. And then, so what was happening was he was overwhelmed with the property, is my estimation. I don't know. And, you know, he's a nice guy. I've known him for a while. So it wasn't, you just can't manage 24 units on your own, I don't think. And then, you know, he had a whole other separate business going on. And so right before we got it, there was a bunch of leases that had been all plugged in a few months earlier to fill the place.
Mm.
And so
that's the best, right? When they put just anybody just to fill the place.
So he put him in cheap rents because he just needed somebody. And our process for the last few months has been undoing that.
But you gotta wait for those leases to end.
Well, they all come up in March, actually. About half the place will be vacant in March. Well, they don't know it's going to be vacant, but we're going to kick out probably 30% of that place. And I think once we get out some of those problem tenants, you know, the transition, once we get out some of those problem tenants, I think the place is going to run extremely well. You know, what I underestimated was the transition, the pain of transition, meaning those people that don't know our system, they're the leftover tenants.
Mm-hmm.
I underestimated how painful that would be. So like my new product manager gets in there and we're pretty strict. You know, it's like, hey, look, if you're late, you pay. Mm-hmm. If you're late by 10 days, you're out. And, you know, there was a lot of leniency going on over there. So the friction that we had of getting people on our set of rules sometimes goes smoothly. And for many people, it doesn't go smoothly. And for many, many people, it's never going to be okay at all. It's always going to be friction. So it's like, get rid of those people. It's just get people in that from the very day one. There are people we know, they know to follow our rules. So that is something I underestimated. And I think that scales up actually as you go to higher class tenants. I think that's less of a problem. But because this is like a C property, I think the more maintenance that a tenant needs, and that scales downwards with class. So the lower the class property, the more maintenance a tenant individual needs they have. And so then you have more friction with property management changes.
Absolutely. But it takes a while to train your tenant, right? It's like a process. If they were doing whatever they wanted, you know, it's going to take a couple of months for them to process that they are going to be paying late fees and that you are not going to be forgiving them and that you're going to go through the process. Some people catch it really quick and some others, they don't. But, you know, like in my experience, you know, it takes time. You might not want to get everybody out at the same time because it's going to take from your cash flow, but you can stagger it, right? Unless they are really problematic tenants where you don't really want to extend it. And
yeah, we'll stagger it for the most part, but there's some that you know, their lease is up March 1 and it'll be gone March 1.
Yeah, no, I totally get it. I had some people that, you know, no way they're going. Yeah. And then some others that I'm like, okay, I can wait a little bit so I can, when they go, then I can remodel the unit. You know, I have, when I bought the 6 units, there was one empty unit and they wanted to put these people and they were nice enough to send me their information and I didn't like them. I knew that they were not going to be good, but he was really pushing to put them in because he was going to lose 1 month of rent, right? So, you know, he still had the property, so he put them in. They are smokers. Like when I get the rent money, it stinks. And because they had the previous lease, I cannot change the way they were doing stuff until their lease is up. You know, so they won't pay digitally. I have to pick up the money personally, and oh my goodness, it's just a problem. But once the lease is up, I'm gonna have to remodel the unit. So because it's so stinking there. Like when I get in there, I get a headache from the smell. So I extended at least 6 more months because I want to have time to be able to remodel it, and they ruined it anyways. At this point. So that's my reasoning. But kudos to you for switching that right away.
Yeah, again, you work with some people, and then some people. We've had that property 7 months now, and some people are going to be a problem. I'd rather have a few months of vacancy than have tenants that pay late or don't, and then you're always catch them anyways. It's just more work for my property manager, and I can go a few months low cash flow, but what I can't do is I can't have a good relationship with my property manager if he's unhappy. So everything I do is try to make make it very easy to do business with people. And so if the property manager, you give him a good property, you give him something that's easy to manage, and he's ambitious to go do it and collect rents and take care of the problems. And then when something nasty comes up, he's more apt to go do it. But if you give him a bunch of tenants that are miserable and they don't pay, and he's always chasing them, and then you're like, well, but I don't want to lose the couple of months of rent. It's like, you're not making his life easier. Why would you then expect him to make your life easier?
Right.
So
what type of changes did you do that it was like a shock to these tenants?
Well, we've gone in there now. We repaved the driveways, which are old and nasty. We repaved those. And then we pressure washed the place because it's old and grimy. So the place looks much nicer. We came in there and we upkeep the place a lot better than the previous manager did now, which that costs me. But at the same time, it also allows me to charge higher rents. It justifies those rents. And it allows me to, when tenants, like you said, tenants come around, they see the place and they see us there. We're cleaning up. We're taking care of it. We're making it look nice. And then they're the nasty ones. And it makes it very, very obvious to everybody who the degenerates are. And then when they have to leave, it's less of a surprise.
Right. Yeah. They either adjust or they are going to have to go.
Yeah. We've had some leave because they're I can tell that they've been, and I mean, look, the place is a C-class property. It's old. It's not, it doesn't have any amenities. I like the building, but it's one of those things where some people have seen themselves out. They're like, oh, they're upfitting this place. It doesn't suit me anymore.
Yeah. Are you planning to do any amenities?
No. So again, the thing with this property was it's very hard for somebody who's new or never bought a big office building to go out and buy, $7 million building, raise all that money. That's a daunting task. And so what this was for me is this was paid for college. I needed something I could get in. I could get the transaction experience. I could show, lender that I have experience running it. And it's certainly much different. And I've been in lending for a long time, and I've done commercial loans for a long time. And even for me owning it and going through the months and months, it's an incredible learning experience. And so for me, this was, hey, look, let's buy a property that has some value add, little, to be fair, little. I knew the rents were I knew it was under rented. So I knew we could raise the rents a little bit, but there was not that much to add. It was more like, look, we can optimize this property. We can get experience. It'll kick off cash flow. It'll be a fairly easy property to deal with.
Excellent. Yeah, I like that. You learn by doing much faster than just doing a course, and it's such an amazing experience.
Yeah.
All right. So what's your exit strategy for this property? Are you planning to hold it for long term, or are you planning to sell?
In 5 years, 4.5 now, if the market, it depends on where the market is. I mean, really, that's what it comes down to. So it depends on where the market is. If in 5 years we'll visit it for the first time, if it makes sense to sell and we can, and rates are still down and prices are still going up, then I'll sell. I don't want to hold it just to hold it. It also depends what I can do with the money, right? Could we 1031 it? It's like, well, maybe, but what's out there? So the exit strategy is, we're very flexible because it's going to kick off cash flow. And what I also did was I make sure none of the partners need the money, right? And it wasn't that much. I mean, not to say 50,000 or 60,000 isn't much, isn't a lot of money, because it is, but in the grand scheme of things, I gave 5 people or 4 people a piggy bank. So here, give me that 60 grand, I'll stick in this piggy bank and it'll make money. And so in a few years, we can kind of decide. My guess is what's going to happen is in 5 years, we'll refinance and cash some people out, and some people will want to hold it probably forever. Some people in the deal are going to want to sit on it, and I'm okay with that. So maybe some people will just refinance and get bought out or whatever.
Right. Okay. Awesome.
Expert tips.
All right, so now we are in the part of the show where I'm going to ask you to give me 3 tips, and you're going to give me 3 tips on skills that scale.
Skills that scale. So I did this speech, and I'm going to do it again in PA. I've been saying this for years. 3 things you should do every day: educate, network, and create content. And that one I added last. And what that means is, every day you can spend time getting better. Learning something new. And I do that primarily through books. I'm a bookaholic. Podcasts is how I learned real estate, the Bigger Pockets podcast, and, other individuals' websites. So every day, every single day, you should spend time doing these things, because knowledge compounds like you wouldn't believe. You maybe forget a book, but you don't forget the message of the book. You might not remember all the quotes, but you're like, you remember what it told you.
Or like one little tip even, right?
That's it. And that sticks with you forever, right? Like I read Rich Dad, Poor Dad in 2005, but I didn't buy a property until 2014, right? When I read it in 2005, it didn't mean anything to me. I didn't have any interest in real estate. I didn't think it was possible, but in my head, it stuck with me. It's like, dude, passive income, not active income. Passive income, not active income. And that thing sat drilled in my brain for 10 years before I needed it. And so the things you read today, you don't know how they'll affect you. God, in 50 years, you're still going to be alive. Like those things might be valuable then too. So educate every single day. The second one is networking. The best possible investment any person can make is in another person. Always. All the money you're ever going to make is going to come from another human hand. So every day I spend time networking. That's online, digitally. I text people. I have this thing where I text people at 7 a.m. I tell them, hey, I hope you have a magical day or whatever. I'm thinking about you. And I buy real estate in their brains, conferences, local meetups, like every single day, networking, every single day, they compound all the relationships, that you have in your life, or how are you going to make money with these people? So you have to know them.
How do you pick? There is so many people. How do you pick who to network with, and how do you go from like somebody that doesn't know you to somebody that you become friends with?
Yeah, so I'll give you 2 examples. Jay Scott, Jay.
Yes.
Look, I look at this guy and I said, this guy's smart, right? He's got his stuff together. He's a big personality in Bigger Pockets. And so I just go on Facebook and I just message him all the time. I just annoy people until they can't get away from me. And then they're like, I might as well be friends with them. It's like Stockholm syndrome, right? I just bother them until they're like, oh, Alex, that guy, I guess we're friends now. Matt Faircloth is another one. Matt Faircloth has been buying multifamily properties. I talked about 3 years ago. He wrote his book, How to Raise Capital. I reached out to him, gained a little time, and slowly but surely, now we're doing video projects together for Bigger Pockets, and we're going to Best Ever, and we're staying together in Denver. And it's just, how do you pick somebody? It's like, find the person who's doing what you want to do, who's your close carrot, meaning they're not so far ahead of you. Oh, the person who owns $500 million in real estate, it's like, not them. But if you own no real estate, it's like the guy who owns 3 to 10 deals. That's the person you need to be friends with. And so you just annoy the bejesus out of them and that's how I do it. Everybody has a different style. But as far as reaching out to somebody, look, it's the internet. Like, do you know how many spam emails do you get a day? Wouldn't it be nice to get a real one? That's it. And so few people just will be willing to reach out. So if you're just one of the few who is willing to reach out, it's like, you'd be surprised how nice people are and how much time they're willing to give you. I've never had it where I reached out to somebody and they're like, I just don't like you. I don't want to deal with you. Leave me alone. Never happened.
and that's the way we met too. Like we were on Facebook and we've been, messaging each other, and that's how you connect with people and you see if you like them or not. I did have one time, I do send friend requests to people that are in real estate. And one time he's like, who are you? Why are you messaging me? I was like, oh yeah, I just want to connect with people in real estate, and he's like, no, I don't know you. Don't message me again. I'm like, okay. But out of 500, one.
Yeah. If people email me with, I have a BS detector like you wouldn't believe. Like I'm a natural gift at it. And so if you email me and you're trying to sell me something, I can smell it from a mile away. And so then I'll give you that. Like, who are you? How'd you find me? What do you want? I'll be really, I'm good at rude. So what I said, what tell people is don't spam people to network. That's the mistake. Like, don't spam people. I'm trying to, I just want to connect with everybody. It's like, no, that's the mistake. Like, find the right person. Like you said, find the right person who's doing what you want to do, who's just a little bit ahead of you and is maybe doing it in the same market that you want to do it in. Then be very extremely genuine and say, hey, look, this is what I'm trying to do. Maybe you can help. Don't send them a 5-page email. Like, be respectful of their time. If they have content already, go read it. So you're not asking them questions for something that they've already put out.
That's
right?
such a good one. That's such a good one.
People,
like research your person. Like if you're trying to connect with somebody, do a little bit of research. If they have a website, if they have videos, if they wrote articles, and then you can find a common ground. Like I read your article and I love what you said about this. And that's, you're gonna connect.
Yeah, and then they know that you took the time. Like you got to remember, like if you're asking people, nobody's going to care about your business more than you. They're not going to care about your business more than you. So if you show them that you don't care about what they're doing, they're not going to care about what you're doing. And so people ask me all the time, like, oh, they email me. And as soon as I say something like, oh, you're into real estate, what do you do? And I'm like, I send in my website. And it's like, here, I already wrote it. And now you can kind of figure out a little bit about me. But if you don't want to take the time to read my website and you just want me to write it again, I already did it. I'm not going to do it again just because you're not willing to read. If you're not willing to read, I'm not willing to write. It's kind of that thing. So, give people a little bit of respect and they'll give you respect back.
Yeah. And you also mentioned something that I always tell my group on Facebook. You got to go to meetups and you got to go to conferences.
Yep.
That's for me, for 5 years or 6, I did it all by myself. I didn't connect with anybody. I was just like, learning as I went. And what changed really my investing was starting to go to network events and conferences. So valuable. Tell me about that.
I'm new to conferences, but man, they are life-changing. There's nothing, I love the internet. I make most of my friends through the internet actually, but there's nothing that's ever going to replace shaking a hand as far as I'm concerned. I mean, maybe somewhere down the future, some technology, VR, whatever, but it's for the very near and mid future, shaking hands is the way. And so, yeah, it's me and Annette and we're best friends, but it's different when I meet you. It's different when you really meet somebody. And so going to conferences is like going to, you have your Facebook group, which I know I've seen grow tremendously over the last year. I'm so happy for you about that.
Thanks so much.
But if you had a conference where people showed up in person, it'd be a whole different event, right? And so that's exactly what conferences are. It's the Facebook group. It's the concentration of people that have the same interest as you in real life. And it's like, hey, I want to go. And it's like you want to go to a meetup to meet all the people who live in South Florida or Miami who all want to do real estate. It's like you go there and there's a couple hundred people there. But if you go to a conference, it's not just the people that are local. It's the people who are willing to step up and buy a plane ticket and a hotel and an event ticket and really commit. And so you weed out the people who are talk is cheap, bro.
Yeah, that's what I was just thinking. Like people that go to conferences, they are really investing on it. They are spending their money. They are serious about it. Even if they don't execute maybe right away, but they are like a lot more invested than somebody that is just on Facebook. But what I found is that I meet a lot of people on Facebook. And then when I go to conferences, I meet them in real life. And then you have this, background that you already talked to them and you kind of know them, but now you meet them in real life. And it's such a nice experience, to do that. And that like the first time that I went to a conference, that's when I realized, oh my goodness, this is so much better. And like, that's when I started getting real connections.
Yeah. And to add to that, it's not a one and done thing. Because somebody will see you at a conference and they're like, man, oh, it's so good to meet Anette, blah, 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 blah. But then I see you at the next conference. And so it's a whole different game. It's like, oh, not only did Anette, and like you said, invest and commit herself to go to this conference, I saw her at the next one too. And I'm going to see you at this third one over here. And it's like, oh, she's really, no joke, taking this seriously. And so, that old saying, like rock stars hang out with rock stars. And so if you want to be one, it's like, just go where they're going. I mean, okay, Bigger Pockets Con was 1,000 people. Are you going to Best Ever Conference in Denver?
I am not. I'm so sad.
Well,
Maybe next year.
speaking of people who are not committed,
Well, I have kids. I can go to everything.
I understand. I'm just teasing you. And so, I'll be at that conference, and then I'll see people from there at I'm going to Real Estate Hackers in Pennsylvania in April. Actually, I'm speaking there. I'll be at Best Ever and Bigger Pockets in New Orleans. Dave Van Horn has Mid-South Atlantic in September. And so it's like, you start to notice, it's like, oh, it's the same 40 people I hang out with all the time. And
Right.
the rule for success in everything I've ever done is the same, which is spend time around people who are more successful than you at the thing that you want to be good at. And if you spend enough time around them, like by osmosis, you'll be good at it. And so the first hobby I ever got engrossed in was powerlifting. And so if you want to deadlift 500 pounds, spend every single one of your days around people that are deadlifting 500 pounds. And then you have no choice. Like, it's inevitable. And so the same thing, I got good at photography. It was the same way. It's like, I just hang around good photographers all the time. And you just pick up things, and they take it seriously. They invest in you. It's like, you have no choice. And so if you want to be good at real estate, it's like, go where all the hot shot real estate people are hanging out at, and just be there. God forbid you try on top of it. But if you just went there, your success would be inevitable.
Awesome. And so let's go to the third tip.
Content production. Yeah. So if networking is you going out to the world and organizing people to be around you, then content production is the beacon that you put out to bring those other people to you. And you 100% have to. You have to nowadays. You have to have it's a digital resume. People are going to like, who is this Alex guy? You're going to Google me, and you're going to go to that website, brokersofchoice.com. You're like, oh, he's real. He's as real as it gets. But if I just, I can tell you I'm real. I can tell you I'm this. I can tell you I'm that. But, if you Google it and I don't have anything, it's the same thing with the conference. It's like, you want to take it seriously? You want to show people that you take it seriously? Then build your own website. Not a Facebook page and not an Instagram. You need those too, but those are going to change. Just like MySpace changed, and Facebook was the only one, and now it's just one of many. Like, you have to have your own URL, and you have to be putting out content, because content and not repurpose. I hate people. Well, I shouldn't say that. You have to do more than just repurposing somebody else's content or their fancy quotes. You have to come up with your own original thoughts and put them on the internet so that people know that you're a unique thinker and not just, a megaphone for somebody else, because then you can just go listen to somebody else if you're just retweeting stuff. The second thing it does is, well, can I tell you the long story?
Sure. Love long stories.
Last year, Netflix lost 30% of their value in one day when they announced that Friends and The Office, the two biggest shows on Netflix, are leaving. And it was more than a light bulb. It was like a bomb went off in my brain, and I realized Netflix is going to die. Most likely. Maybe not, but they're certainly not going to be the titans they are now. And they're going to have the exact same problem that Uber's going to have the same problem coming up. And what it is they don't own the intellectual property. They're just a software infrastructure to get you to the intellect, to get you to the thing that has value. And so having your own website is the same way. You own the intellectual property, and people binge. So I say all that to say, you need to start putting out content now, because in 5 years, right, if somebody finds you, they're going to go back and binge through your whole catalog. And you can backwards monetize content on the internet. Somebody comes and looks at a blog from 5 years ago. It's got an ad on it. It's worth something. Intellectual property and binge culture. Like, these are my two most important things for 2020. And you should do them every day, because it's a skill like any other. You get better at it. So you got to practice. Put out content, build a book of business, show people that you're an authentic and real, and that you have your own real thoughts, and it'll act as your digital resume, and then do it over time.
Absolutely. And that's what I'm creating right now, for my audience. You don't have to be the expert. You can invite experts to talk to you if you don't feel confident about that. But then you're going to learn as you go, as you hang out, like you said, with rock stars. You're going to start learning their tricks, and you can apply them, and then you're going to get results.
100%. And look, everybody has different skills. Everybody has different strengths and weaknesses. So whatever your content is, like when I say content, I mean, you don't have to be teaching people anything. Just tell your story, right? Gary Vee is good in that. He's like, just document. And I agree with that. Like, we talked about it before the show. Like I have no strategy with if you go to my Instagram and my YouTube, I don't have many views. I don't have many followers. It's not it's not a marketing thing. It's more like tell your story for real. And then the people who are looking for you specifically, they'll find you. That's what I mean by content production. I'm not trying to say sell ads or be a marketing guru. What I'm saying is you need to have a place on the internet that's your own, that you can tell your story so that eventually people are going to want to hear it.
Absolutely. And, if you are genuine in what you do, people are going to look for you. Like, I love watching your posts on Facebook. And, every once in a while, I'm like, what is Alex doing today? Let me search for him. I want to have some laughs.
Yeah. Yeah, right. Well, that's it. Genuine is the answer. And so just like, the internet, the algorithms are getting really good at weeding out nonsense. And so in the old days, you got junk mail, right, to your doors. Like, I still get them, right? The circulars, you get all that nonsense. It's like, how do you guys afford this? I can't. Okay. Well, then it became email, spam mail, right? It's like, just go to spam. Well, yeah. Now, especially because we are at the height of the market, and there's so much liquidity around there and so much money and so much, it allows for a lot of scams. And so you get it all the time. I'm sure on Facebook you get you get scammers emailing you, messaging you, trying to sell you stuff. Instagram, you get that stuff. And so, well, what about the ones that are okay? What about the people who are good? They're not scamming, but they're not that authentic. They're just repurposing other content. So I say all that to say, like, the internet algorithms are going to get better, and they're going to weed out people who have low impact content, right? It's like, oh, you're just rehashing somebody else's phrases all day. It's like
it's already happening. Like if you don't get engagement, your posts are not shown. So,
right. And so you're gonna be able to and you're gonna be able to manipulate the algorithms less. The algorithms are gonna get better and better and better. And so they're really gonna shine on those who are authentic and genuine. Really, really. And as it gets better, it's like, oh, you're gonna talk to either your friends or you're gonna talk to somebody. It's like, yeah, Facebook really thinks you're gonna like this person because they're putting out stuff that's real. And so I say all that to say, like, people say, I don't have any value. I don't know anything about real estate. Yeah, it's like, that's not the point. The point is to tell your authentic, real story and not to sell a story, just to really tell your story.
Awesome. I am so excited to have you today. This has been amazing. I will go for 2 more hours, but I'm sure you have better things to do.
I'm a talker, but I have to do work. Yeah.
Tell me, where can people find you on your on internet?
Yeah, brokersachoice.com. Brokesachoice.com is my website. You can find me on Facebook at Alexander Scott Felice. That's where I do most of my ranting. You can find me on Bigger Pockets. Instagram, Alex Scott Felice. I think, yeah, and the rest of them, I don't do much tweeting. I should. And YouTube is my I don't have that many videos in there, but YouTube is my 2020 focus. I got a big one coming out. I think it's Alexander Felice. YouTube's gonna be my big 2020 goal.
All right. So everybody that is watching this, please go to YouTube and give him some likes.
Yeah,
and tell him that you found him because of my podcast.
Yeah, do that. That'd be dope. I want to know.
All right, guys. Thank you so much, Alex. See you next time.
Thank you so much. Be well.
This was Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.